What's going on, guys? It's a daily review. How we uh how we did today. So when I woke up, I had these equal highs marked. I had these equal lows marked. We left in, I guess you could say, London session around 6. We had these equal highs. So this was the draw. Started looking at the market around market open. Right away, I think we had a Judas swing. I think it was an SMT with ES. That's why we dumped. We also had an SMT at the highs, I think on the 1 hour, the 4 hour. So we also dumped there. Then the rest of the day, I seen an SMT at the lows with ES. So I was also bullish since we took out most of sell side liquidity here. But for the first from 9:30 till 11, we pretty much just chopped around. This was textbook right here, this setup, because we did sweep liquidity. And by the way, I did not take a trade in the morning because when price action is this choppy, you just don't want to be trading this. We're not creating any fair value gaps here. Nothing really looks clean. I mean, we did have this setup here, but we're not really delivering from anything. I guess you could say we were delivering from this, but now we wasn't even delivering from that. We just, unless there was an SMT at these highs, then this trade made no sense. You could see it worked out, but there was just really, we weren't delivering from anything. We didn't even sweep liquidity. So I didn't take a trade this morning, but when I seen this, it looks textbook because we did sweep liquidity here. And the problem with this though is we left equal lows here. So this fair value gap was nice. It was a nice singular fair value gap in the leg. Very obvious. When we inversed it, obviously you see we went from 300 to 330. So that was a 30-point move right there. But that's against my rules to take because I don't long with equal lows below and I don't short with equal highs above. So I had to let that one go. And then right here, this was another textbook 5-minute inverse. Sorry for all the mess, trying to show all the examples from today. So we pumped up here, we swept some highs here, some liquidity. We also were delivering from this. Your eyes will start to see this after a while, all these little things. When we inverse this on this candle, we put in an OB, order block. Order flow looks bearish here. It was a good short down to the equal lows, and I was not watching the charts at the time when this played out, but for this not to hit the lows here, it must have had an SMT with ES. ES must have hit the low, or YM might have hit the lows. So keep an eye out for SMTs because equal lows is a good draw, and when we come this close and don't hit it, has to be an SMT. But in my head, after I seen this, I was like, okay, I'm still bearish because we left triple equal lows here, relative equal. And so let's go back to the 1 minute and see what we see. So we came up here. There was a few setups in here, as you can see. I drew them out. You'll pick up on them. Singular fair value gap, inverse came to equal relative equal lows here. Not a bad play. And then here we swept most liquidity. We didn't hit the equal low, so I guess this could have been a long here, but we had equal lows, and the fair value gap wasn't that obvious, so this isn't the greatest. But with this momentum, it looks okay. Then we came here, we had another 1 minute setup down, and so kept trying to find shorts to these equal lows, and I did not take this one. Let me see, we were on the 2 minute. The one I actually took, let me delete all this. I'm only gonna have the equal lows marked up and the setup that I did take. Okay, right here. So when we inverse this, that was confirmation telling me, and we respected it. So when we came here, and then we put in an OB here, that was confirmation telling me we were going to the equal lows. I got in a little bit early, I think on the 1 minute, but when we inverse this, I caught about a 10, 15 point play down to the equal lows. And then right when we swept the equal lows, um, so right when we swept them, we were here, swept the equal lows. I was telling my friend JD, I'm like, keep an eye out for longs now. We took out sell side. If we get a V-shaped recovery here, we're going long. And so I seen this. and I seen this. There was two in this leg. There's also a little OB here that we were kind of rejecting at first. Once I seen us inverse this with this V-shaped recovery, I was in here. Honestly, not great because we could have rejected this gap and we could have rejected the OB, but I was de-risked on this trade just because I had already won the previous trade, and so I was just testing it out to see. I mean, if this lost, it would have been my stop loss is a candle close back below, so it wouldn't even have been a big loss anyways. Plus the risk to reward was worth it. Where did I get out? Got out at where was it? I think I caught like 10 or 15 points here again. So I was about 10 points on the first trade, 10 to 15 on the second trade. Don't know exactly where I got out. I gotta log into my account to see the executions later. But as you can see, that was a perfect setup right there. That's literally textbook. I mean, I wish it was a singular one. I wish they were more obvious, but it worked out. This ended up turning into a break or block, but that's, I don't really use breakers, but it ended up rejecting it perfectly. And then we came up, and when we came up like this, I was telling my friend JD all day, I'm like, we are going to hit those equal highs that I had marked up. I had these equal highs marked up all day. I literally had then I had the 930 high marked up all day because that's a good liquidity pool for the other equal highs. Those aren't equal highs. Where were the equal highs? Just had them marked right here. These are equal highs. And there might be another pair, but I don't think so. I mean, those are relative equal. Okay, so this is what I had marked up from earlier, and then we came down a little farther, I marked this high out. So these were the prominent highs, and I'm like, all right, we had bad price action in the AM. We should have good price action in the PM. So I kept an eye on that in the PM. I was done trading for the day though, because I caught the short to the equal lows, and then I caught the reversal off the equal lows. But I knew the draw was higher, and I just wanted to see it play out. And I mean, that's good, even if you're not trading it, just to have some targets marked up, some liquidity, and see tape read it and see, did we hit that liquidity? Did we get to those targets? And did it give us an entry? And what would you have done if you were trading it? I mean, we had this small entry here. Problem with this is we closed all the way up here above this internal high, so this would have been invalid. If I take the 2-minute chart, waited just a little bit, we had a setup here. Not really too obvious, but the entry was nice because we closed here and we knew our targets were way above. So that was a nice trade. Um, and then once we swept that, look what happened. And I was telling my friend this the whole day. I'm like, look, now we're going up and we're taking buy side and we're consolidating after we took buy side. Not really a good time to be trading around 3 o'clock in the afternoon, but the price action was excellent. This would have been your entry right here. So we came up here, we swept all this liquidity from the morning. It also was a Monday with no news, so it was not the greatest, but the PM session was great. Were we delivering from something? And look at that. If you get your eyes to tune in on this eventually, you'll see it. We were delivering from this. Probably we're delivering from another higher time frame PD array as well, but we're delivering from this. We swept liquidity. We inversed this. Your entry would have been here, candle close, because we didn't hit the internal low. Once we hit the internal low, I would have taken some, actually, no, 301 to 296. That's only 5 points. I would have set my trade to break even, and this would have been a break even trade. But after you see this OB put in, especially a really nice OB like this, that's an OB right there, an up close candle before a down move. And once you see this OB in, honestly, if I was stopped to break even, I probably would have re-entered, knowing with this momentum after we swept liquidity, delivering from that with these lows here. So low of day. Good liquidity pool. Everyone's trying to long there, so let's go stop them out. Pretty much how the market moves. Once you've seen this, could have caught 20 points literally in 5 minutes. So that was very textbook. I was very happy to see these equal lows get taken out. So sell side got taken out. Relative equal lows, like I said. That was my targets in the beginning of the day was equal lows. Once these got inverse, immediately I was like, I'm bullish. If we get a V-shaped recovery here, the longs look good. To buy side, which I had marked up earlier in the day. And then after we took buy side, we still took some form of sell side after that, which was low of day, but yeah, it was just textbook. I definitely recommend you study liquidity sweeps, delivery from fair value gaps, inverse fair value gaps, good liquidity pools like equal lows, equal highs, intermediate term highs, intermediate term lows. Um, See if I'm missing anything. Data highs, data lows. Dodgy really teaches that. Order blocks, they're okay. I use them sometimes. They make inverses better because if we get an order block and then an inverse, it makes it even more high probability. Don't really use breaker blocks, but yeah, this was just textbook. I'm sure. Oh yeah, here was another setup. I seen this at the end of the day. I did not take it because honestly, we were just so low here and we swept all this liquidity, really with no displacement. I mean, we had a lot of momentum down, but we swept all these lows and I'm like, honestly, I'm not really bearish here, but we did have this very tiny fair value gap here. Maybe on the 3 minute it was better. Nope. We'll go to the 1 minute. I guess we had, what do we have? Guess you could have drawn this one, this last one. Once this final one broke, you could have had an entry here and taken it to low of day. Or actually these relative equal lows here, not bad. I mean, it would have been boom. Would have been like 10 points. So that wasn't bad because we were delivering from this. A lot of momentum, inversing that. We also had a little bit of AMD here, I guess you could call it that. Accumulation, manipulation, distribution, really how I see it. AMD. Um, yeah, at the end of the day, not much happened. I mean, we're in Asia session now. We're going into Asia session, so I wouldn't be trading this, but there actually was a move in Asia session. Just to show you more examples here, I'll show you this. That was invalid. This worked out nice. So we had quite a few fair value gaps here, but once this major one right here got inversed, after, no, we never swept it, but we did sweep this liquidity. And as you can see, we delivered, didn't deliver from that. It must be on another time frame then. Let's see. Yep, exactly. Deliver from it here. Deliver from this 2 minute. Still dumping after that, so it was a very good sell. 1 minute. All right. We swept liquidity. We didn't take all of it. Sometimes we don't have to take all of it. That is relative equal highs. I do not like that. Market might want to come up and sweep those eventually, but swept liquidity, delivery from fair value gap, inverse. Inverse a very obvious fair value gap. I wouldn't take this because it's Asia session, obviously, but once you entered here, your target would have been this low. Maybe had target this low. Obviously, both hit. Then it gave you another entry. We swept liquidity again, delivered from the inverse, the same inverse, and then we also inversed this big obvious one. And immediately after we inversed it, as you can see, we dumped to our new target, which was this low, and we just keep delivering from things, sweeping liquidity, and disrespecting and inversing some fair value gaps. That's about it. I mean, I don't see anything else to show in terms of examples. Maybe I could find a 2 minute here, 3 minute. I don't think this one gave an entry either. But as you can see, no, 2 minute. So here, I guess we had this fair value gap here, and then we had this last one here. I'll show you an example of a bad one because this is invalid because when this candle closed, yeah, we had a lot of momentum and we were not delivering from anything. We might have been on a higher time frame, but when this candle closes and hits, that's equal, relative equal lows. Once it hits the internal range liquidity, internal low, the trade becomes invalid because that's just how the rules are. That's how the market moves. And yeah, keep that in mind. I'll show one last example of textbook A plus setup. All the things check in the box for how every trade should look. Pretty much every single one of our trades should look the same if you're trading this model. And if you follow all the rules, the win rate will be very high. So I'm gonna go back in time and find you one last example. We will flatten out the screen and go back to a random time. Let me get that out the way. See if I can go to replay mode. It lets me. No, Zoom is not letting me, so we won't go to replay mode. All right, we'll just find one during New York session. Textbook. Let's see. Um, okay, this wasn't bad. Oh, has to be textbook. Let's see, 2 o'clock. Already much going on here. Let me. You gotta also put if you ever gotta put the videos in 1.25 speed or 1.5 speed. That helps a lot because I watch a lot of YouTube videos and that definitely helps. So you can get more information quicker. But as long as you're focusing, I don't think it should impact anything. All right, 3:26 a.m. I'm gonna find one for you guys. They happen all the time. I don't have my sessions marked out, so it's kind of hard to see the sessions. But here, let's see. Okay. So we were delivering from a higher time frame PDA right here. Let's see if we got an inverse here. Delivering from this swept sell side, some form of swept sell side. We we had buy side above, equal highs, swept sell side liquidity, delivered from that. I mean, it was probably a higher time frame fair value gap, but this first one, look, see, some of them fail, and it depends if there's an SMT, so you gotta watch out for SMTs. The first one failed, your entry would have been when this last one broke. Boom, immediately we closed above, you would have entered. Immediately we closed back below, you would have exited. So not a bad loss. Especially when you gotta understand that if you're winning 8 out of 10, 9 out of 10, even 7 out of 10, 6 out of 10, like you gotta know how to take the losses because if you're not able to take losses, you are not gonna last in this industry. The candle close was here, so it was pretty high at this internal high, which I would set my trade to break even unless you have a lot of conviction in taking those equal highs. Matter of fact, we already took these equal highs here. I did not see that. So this would not be a good trade, but let's see where those data highs. No, but that's a 930 high. So this is still a good liquidity pool here. We know 930 open is very volatile and we sometimes get a wick like a data high or data low, and it just means there's a lot of liquidity. Price moved very fast. It was pushed down. So there's a lot of liquidity resting above here. So if you entered here, candle close here, you would have got 89 to 19. That would have been a 20-point move. Correct me if I'm wrong. 30-point move in a matter of like 10 minutes. And then once we swept sell side, here's another trade. Boom. This is like textbook. We swept buy side liquidity. Correct me, not sell side. This is buy side. Took out buy side, very obvious fair value gap. That's the most important thing. The very obvious ones are the ones that are gonna be the best ones because most ICT traders when they come in, the reason why this works so well is because most of them are probably gonna buy this big obvious fair value gap that they can see visually with their own eyes. These little ones, it's kind of harder for them to see because they're just starting out and they don't know their eyes aren't tuned for it yet like mine is. Like I could just look to the left and boom, 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 but that takes time. So the big obvious ones are the best ones. And your entry would have been here. You would have targeted low of day and boom, as you can see it hit. Entry would have been here. If you had a lot of conviction, I would have held. I wouldn't have set the trade to break even, but the break even stop does help a lot. Maybe take partials at the internal liquidity. I don't know. This wouldn't even have stopped you out of break even actually, because you would have entered here. You would have take partials and set break even here. 92 to 82. That was 10 points. So that was enough to take break even. That's a textbook trade. You don't need home runs. Remember that. Just a little piece of the pie if you could get that. I mean, if you saw this wasn't bad because we swept this, we swept these equal lows. That was textbook. Boom, close here. Target, that wouldn't have been a good target, but try to get 10 points at least, 62, try to get to 72 at least. That's what I recommend if you can't find a target. I mean, there's really no liquidity here unless maybe you could say we were going to balance this out, this tiny, tiny fair value gap. But it'll take time and you'll tune your eyes to see that. These little fair value gaps, volume imbalances. Actually this right here was also textbook. Look at that. We respected it to the upside. We had liquidity below, which was equal lows, relative equal. Looks like we swept it by a tick, but still relative equal lows. When the candle closed here, you could have, I guess that would have been not a good enough risk reward here, but you see the model. I'm not really in live time. You got to decipher if you want to take the trade or not. Maybe it closed way too high above the internal liquidity, or maybe there's not enough risk to reward, maybe there's an SMT, like that's up to you, but you gotta back test and see what works best for you. Just showing you examples. Here's a good example too. This was at 230. We delivered off of this. Boom. Got a couple fair value gaps in this leg, but I like this huge fair value gap because we know once we inverse this, we're gone. Boom. And what happened? See if there's equal highs here. No equal highs here. Relative. No, not relative equal, but you could have targeted AM highs, high day, yeah, high day, I guess you would have targeted. That was textbook. Delivery, sweep, inverse a huge fair value gap. Say you trade a break even once you see this fair value gap up here because you don't know if it'll be inversed. I mean, this little one here is not really liquidity sweep, but we were delivering from this. We did inverse this little one. Problem with this is we're so high in premium. Like, do you really want a long here? I mean, I guess if you see targets like this, high a day here, which is a good liquidity pool, you can enter this at 38 and get out at 47 and catch a little 9 points, but not the greatest. After that, the day was over. I mean, let's see. I mean, inverses, they just work. Like, here we swept liquidity, we inverse that, boom, we at least went to the internal high. Oh no, that we didn't get to the internal high here. That's equal highs and we left them. But you came back and took them out. Yep, came back, took them out, boom. Took out all that liquidity. That's how the market moves. Went to buy side, probably dumped. Look, dumped. A lot of liquidity here, underneath. Took it out. See, we took it out, boom, we went up. Delivered off this. Took out all the liquidity again, equal lows, inverse this, continued up to all these equal highs here, a lot of liquidity here. I don't draw trend lines, I don't use them, but when you can draw that, you know retail traders are short in that. And so they're engineering a lot of liquidity like this in the form of highs that have not been ran yet. And the market can't go down before until it goes up. So what I mean by that is the market cannot go down until we sweep some sort of buy side liquidity in the form of an old high like this right here. And until we sweep some form of liquidity or deliver from a fair value gap, we cannot go down. So there it is, and we can flip the chart around. I forget how to do that. Settings, how do you flip the chart to show you this in the opposite so you can see it invert. Boom. So we can't go up until we go down. So here, when you're here, you're like, okay, I'm not in anything, but then we have a fair value gap here. Come here. Oh, we sweep this. So now we know we can go up because we've went down and taken out these buy stops resting under here. And then we would get this inverse long, and that's the model right there pretty much. Hopefully you're delivering from another PD array as well, because that just makes it more high probability. Maybe we put in an order block when we inverse it. This is like textbook right here. Delivery, sweep, inverse, order block, some sort of equal highs up here, or good liquidity pool. And boom, that's it. You're off to the races right there. Thank you guys for tuning in. I know it was a long daily review, but there kind of is a lot to talk about with this strategy and how I trade and just everything in general. So if you guys liked it, drop a comment, drop a like, and if you have any questions, let me know. And I'll be making all types of videos in the future about my strategy and how I trade. Also, we'll be getting a Top Step account next week. Probably we'll do a little series on that to show you how I pass that, and maybe I'll do it in a week, 2 weeks, but I'll keep you guys updated on that. Thank you for tuning in, and God bless you. Have a good night.